Hey everyone, welcome to today's Explainer. We're dropping you right into the middle of an absolute epic, anime-style tug-of-war that is completely defining the crypto market today, July 30th, 2026. Seriously, picture this massive, dynamic clash. You've got heavy macroeconomic gravity on one side and highly anticipated game-changing catalysts on the other. It's a vibrant, high-stakes battle playing out right now on the charts. So, let's break down exactly what's happening, why it matters to you, and what you need to look out for.
So, the ultimate question we're facing today is this. Is the market about to break out or break down? Right now, Bitcoin is in this kind of weak recovery phase, right? It's really struggling to hold its ground around $64,000. It's caught in the middle of a massive pressure cooker. And to understand where we might go next, we really need to look at the forces trying to pull everything down.
Which brings us to Section 1, the macro market squeeze.
Boom, 5.23%. That is the current yield on the 30-year U.S. Treasury bond. And to put that into perspective, that just hit a 19-year high. This violent spike comes right off the back of the Federal Reserve's latest meeting. They held their benchmark rate steady at 3.5 to 3.75% for the 7th consecutive month. But, it wasn't just a regular hold. It was a surprisingly hawkish hold that basically sent shockwaves through the bond market and instantly pressured risk assets like crypto.
And to make things even heavier for the bulls, 3 FOMC members actually dissented and voted for an immediate rate hike. No way, right? Plus, Fed Chair Kevin Warsh made it crystal clear that inflation is still running hot above their 2% target. So, what we're looking at is a severe higher-for-longer squeeze. When yields jump this high, capital just gets sucked right out of riskier assets, creating this incredibly heavy gravitational pull on the entire market.
And unfortunately, that gravitational pull is being compounded by some severe geopolitical instability. The U.S. has launched fresh strikes against Iran's Revolutionary Guard, and this is in retaliation for a ballistic missile attack on a U.S. base. As a direct result of this escalation, we're seeing Brent crude oil surge near $90 a barrel. Historically, whenever we see this kind of tension in the Middle East, global sentiment gets super fragile. Investors instinctively flee toward traditional safe haven assets, like gold, which, by the way, saw a solid rebound today. For the crypto market, this kind of macro uncertainty usually caps the upside, adding just another layer of resistance against any sort of breakout.
All right, let's shift gears to Section 2, the White House catalyst. Because every good clash needs its heroes, right? The entire industry is basically holding its breath today. The White House is scheduled to release a highly anticipated, comprehensive crypto policy report, and it has everyone completely on edge. We are talking about a landmark policy document that could literally redefine the entire U.S. digital asset landscape.
This is the ultimate wait-and-see catalyst. Rumors are swirling everywhere that this report might actually include proposals for a national digital asset stockpile and a strategic Bitcoin reserve. I mean, if those disclosures are confirmed, it could be the exact spark we need to trigger a massive institutional rally, completely overriding all that pressure from the Fed. On the flip side, though, if the report focuses heavily on strict regulatory recommendations for stablecoins and market structures, we could absolutely see a temporary sell-off. The market is literally suspended in animation waiting for this to drop.
Moving right along to Section 3, Institutions versus Security Risks.
Meanwhile, there is this high-stakes clash happening on the infrastructure level. Just look at this incredible contrast. On one hand, we've got major structural support pouring in. The SEC just approved Bitwise's crypto index ETF, bundling Bitcoin, Ethereum, XRP, and Solana. Plus, Morgan Stanley launched Ethereum and Solana staking ETPs. This is massive, long-term validation for altcoins. But colliding right into that is a pretty stark reality. Security firm Blockade reports that over $1 billion, yes, billion with the B, was lost to crypto hacks in just the first half of 2026. So it's a total tug of war between institutional confidence building the space up and record-breaking exploits threatening to slow down retail entry.
All of this creates a deeply complex regulatory landscape. Between the looming White House policy report we just talked about and the SEC giving these mixed signals, approving massive ETFs while the industry is simultaneously suffering record-breaking hacks, the structural friction the market has to navigate right now is just immense. It's a critical tension point between those pushing for mainstream integration and the urgent absolute need for tighter protocol security.
Let's pivot over to Section 4, Top Movers and Mining Pivots.
Think of this like a vibrant comic book stat card highlighting today's heroes, because despite the range-bound market, some tokens are putting up a serious fight. Picoin is rallying 4.5% ahead of its impending Protocol 26 upgrade coming up on August 11th, and BNB is actually outperforming the top 10, surging as Binance pushes for CFTC approval in the prediction market space. It just goes to show that specific, powerful catalysts can still break right through the macro noise.
Now, what is truly fascinating here is how this macro squeeze is fundamentally changing the backbone of Bitcoin itself. Mining difficulty just hit a staggering record of 126 trillion. Profitability for miners is incredibly tight right now. The pressure is seriously on, and the operators who keep the network secure are having to adapt, and adapt fast. To survive this intense squeeze, public miners like Marathon and Core Scientific are executing this brilliant pivot strategy. First, they're liquidating reserves. We've seen over 15,000 Bitcoin sold recently. But more importantly, they are pivoting their massive infrastructure and actually leasing out their high-powered data centers for artificial intelligence computing. It's a fantastic survival tactic. They are merging the physical infrastructure of crypto with the exploding demand for AI, literally just to stay profitable against the Fed's gravitational pull.
Which brings us to our final section, the final standoff.
So, where does this leave us? Well, here is where the final standoff is taking place. For Bitcoin, the battle lines are drawn right at $64,000. It desperately needs to hold this line to avoid a breakdown toward that critical $62,500 support zone. Meanwhile, Ethereum is stalled right at its 100-day EMA, sitting at $1,932. It needs a clean, decisive close above that resistance line to open a clear path up to $2,100. Right now, they are totally stalled out, just fighting for direction.
And that brings us to the ultimate cliffhanger for today's explainer. Which force is actually going to win? Will the heavy gravity of the Fed's interest rates and escalating global conflicts pull the market down? Or will the White House drop its strategic Bitcoin reserve policy that provides the ultimate spark for a massive breakout? This deadlock at $64,000 won't last forever. Keep your eyes on the charts, and we'll see which side claims victory. Thanks for hanging out with me today, and keep learning.